Good day, everyone. Welcome to the Great Bear Resources webinar. This is Knox Henderson, Investor Relations. Presenting today will be the President and CEO of Great Bear, Chris Taylor, and Vice President of Exploration, Bob Singh. Before we begin, I'd like to start with a little bit of housekeeping. First off, we've been gathering a lot of questions during the course of the week, and at the end of the webinar, we'll try to cover off a number of questions. If you'd like to make a question during the course of the webinar, just click on the Q&A button at the bottom of your screen. If you don't see it, just hover your mouse around the bottom of the screen and it should pop up. And then we will cover off those questions in priority and relevance to the entire audience. So before we begin, I'd like to read a 30-second disclaimer. This webinar is hosted and recorded by Great Bear Resources Limited. This call is for informational purposes only and does not constitute an offer to sell or the solicitation of an offer to sell or buy any security and should not be relied upon as a basis for an investment decision. This webinar also includes forward-looking statements. Known and unknown factors could cause actual results to differ materially from those projected in the forward-looking information and statements presented today. Investors are encouraged to perform their own due diligence and to seek the counsel of a professional registered investment advisor before making any investment decision. So with that, I'll pass the webinar over to President and CEO, Chris Taylor.
Thanks, Knox. Thanks for the introduction. I hope everybody can hear me okay. Knox, are you able to hear me okay?
I hear you fine. Yeah, you're coming through nice, loud and clear.
Okay, I put these slides together over the last couple of weeks, and I've actually been in Red Lake for the last 2-week period. So it's quite interesting. Like the project is getting to a critical point where the amount of information that's coming in from drilling is letting us make some pretty good guesses at this point, or very educated, informed guesses about what the project's going to look like over the long term. So myself and Bob, we're going to go over some of that information with you today, and it has implications for ultimately how this project is going to play out. But just to start things off, what I'd show you here is some pictures. This is drill core that was on the table about a week ago now. And when I look at this, a few things are really obvious. A lot of visible gold. You can see all the circles that you have on the screen in front of you. The other one are, some of these really transposed fabrics, and geologists that may be in the audience will recognize the fact that, this is a rock that has undergone probably 20-to-1 flattening and strain, transposition. And this is what's homogenizing the gold and making it so predictable over the course of kilometers. As we drill it, we just keep hitting and hitting and hitting. We're going to go over some of that. We're going to go over some grade distributions that we see coming together. Why on earth are we putting out these high grade panels that we've been putting in the news releases recently? There'll be a lot of this information, and I think it's a good time to get all this out into everybody's minds. But to start things off, we had some sad news with the company a couple of weeks ago, and this is our friend and colleague, Terry Bersie. Very unfortunately for us, Terry passed away a couple of weeks ago at home. Terry was a project manager with Great Bear, and this really made me reflect. A company really it's a collection of people. More so than anything else, more so than the asset. It's a collection of shareholders. It's a collection of management people, people that are operating in the field. And Terry was our project manager and absolutely instrumental in getting Great Bear to where it is today. So we all owe Terry a debt of thanks. And you kind of think about the industry. There's a lot of men in the industry, and in that sense, the company, it sort of has a lot of fathers, a lot of parents, father figures that it can look to. But if the project had a mother, that mother would be Terry. She helped everything get off the ground smoothly. And if it weren't for her involvement, her husband, Ian, and partner, Crystal at Rimini, we wouldn't be where we are today. So we really wanted to say thank you, Terry, and we will definitely miss you. All right, so moving on to Great Bear, we're going to recap a few points before we start digging into new material. So, without a doubt, and there are a lot of drill holes now that we can draw this on, this is the largest new discovery, gold discovery that's been made in Canada for many years. Like the continuous area of mineralization at the LP fault, it really doesn't have exploration stage peers. And I'm going to show you in the presentation a bunch of side-by-side comparisons to big deposits, and that's going to make this point manifestly clear. We do have over $90 million of cash on hand. We're funded now into 2022. You got to say it's June, so we're already halfway through 2021, and we're planning to spend this year about $45 million on exploration, which is only half done. And what this means is that we have enough money in the treasury to advance the project this year and next year without the necessity to go back in the market for a financing. That gives us a lot of control, puts a lot of levers into our hands to benefit our shareholders, which is what we like to see. We do only have 57 million shares issued and outstanding. I've talked about this point a lot. We could go over the philosophy of that later if you want to discuss it, but suffice it to say, if you're going to develop a project, you want to have a low share count because it reduces the dilution that you have to suffer as you go through the stages of advancement that we're looking at here, and that all companies go through if they're successful like we've been. We've had 4 years of constant success, and that's, it's indisputable at this point. We found a major discovery. We have a lot of good gold results that have come into the market, and we've made shareholders a great deal of money. We want to see this process continue, and that's going to be the flavor of what you're going to get today is what's this going to look like now versus what's it going to look like over the long term, the many years that this project will develop, what's the current state of affairs, and what's it going to go to. We did see in the last financing that we did about a $70 million placement earlier this year. 15 institutions take place in that placement. We have another one join the registry recently. So this is a story that's being increasingly owned by sophisticated institutional hands. The reason being there's enough data now out there in the public sphere to give confidence that we have a major discovery and that it has a growth trajectory ahead of it. And it's one of the largest exploration programs in the country. Of course, you see news coming out of Great Bear all the time. That's because of our enormous program this year. So what's changed and what's coming up? Well, frankly, we are in the final months now. After the discovery that we made at the LP Fault 2 years ago, we're down to the final months of drilling off this maiden mineral resource inventory. And that's really a transitional stage for us because it's gone past the point of speculation in that sense, and it's entering the point of putting the meat on the bones of what is this going to look like. You can see on the image on the right, these are some images from resource modeling reports that we're getting in all the time. So this work is ongoing by a number of parties. It's certainly very interesting to see how different groups model up what we found so far. And when you're looking at this here, I would just keep in mind, that we've got approximately 400 drill holes that we need in order to get that near surface, 0 to 400 meter deep initial maiden mineral resource estimate. That's going to take about 400 holes. We've published about 318 holes. And, we'll talk about this a little later on, but we're actually up to 375 holes, either completed or in progress on the project. So this is getting close. And, it takes a couple months sometimes for assays to come back from the lab, generally kind of 4 weeks to 6 weeks. But it's obvious that this work is going to be completed this year. And that's something we'll keep you up to date on as the year progresses. Obviously, the 400 hole number is a rough target. It might be another 50 holes on top of that. It's very unlikely to be hundreds of holes on top of that. So we're very confident that that first shallow resource drilling will be finished in calendar year 2021. So when are you going to see that initial resource report? Well, it's going to be early next year. How early it's going to be is going to be depending on some of the factors that we're answering with drilling right now. And this is the exceptional continuity that we're seeing on the zones. If that holds like it has for hundreds of holes, this is going to be a resource report that is delivered early in 2022. Right now, what we're disclosing to the market, and this has been a change for Great Bear, is from just rafts of drill results coming at you again and again and again, we're beginning to show you some of the high resolution detail as we approach completion on drilling some of these zones. So we've put out 3 of what we call high grade domains recently. Bob is going to walk you through a bunch of that information, but there's 17 of these that they're pretty well defined already, and we're completing the drilling on, and there are others that we see as we continue to do the drilling as well. So what this is letting us do is model out the 17 high-grade domains plus whatever else comes. And there's additional on top of that 7 bulk tonnage lower grade domains that surround the high grade and occur between the high grade panels. And you can see this, we'll look at it in 3 dimensions with Bob here very shortly. So why are we so excited with all this? Well, it's because the gold here is incredibly predictable. That's a function of the fact that the rock has been sheared and transposed, and the gold has been melted out and reprecipitated in parallel to fabric. And that means it's sheet-like geometry that you hit again and again and again over kilometers. And we'll show you that as well. We have analyst consensus. They're getting excited about what we found of share price projections of $22 to $36 a share. And that's really just based on the information that they have on hand in the near surface. This is a big gold discovery. We keep emphasizing this point. I'll show you some comparisons on size, but it's clearly a big discovery, and it's clearly, Red Lake is clearly a tier 1 mining jurisdiction. So it's the best of the best. It's one of the best locations on the planet to find something like this. And of course, where we found it is right beside the highway and right beside the power lines. We do have an exploration agreement in place with the Wabascang and Lac Seul First Nations. They're partners on the project, and that's been a business relationship for the last number of years. And about a year ago, working with Terry, we got that exploration agreement in place as well. So we have good long-term support and cooperation for this project as we complete all the steps that we need to get through. And we're looking, if we're right about everything we're seeing on this project, there could be a very positive re-rating in terms of the value of Great Bear when we get those initial resources out. And of course, with the information that we're seeing, it's very likely in 2022 and probably before too long into 2022 that you'd be looking at a PEA type disclosure as well. So by the numbers, this LP fault that we found, what does it have in it? So far, what you see is projected to surface. There's the highway, there's the power lines, and there's the zone. That's the LP fault grid drilling zone over about 4 kilometers that we're looking at right now. But we've drilled the LP fault with every drill hole having hit gold over about 11 kilometers of strike length now. That means that if you took the LP fault and you stuck it in Red Lake, you could actually drill that zone of continuous gold mineralization all the way from town to the Red Lake mine, or conversely, all the way from town over to the Pure Gold mine. Just the scale of it is absolutely astonishing. So as I mentioned, we're at about 375 drill holes, either in progress, like they're underway right now, or they've already been drilled. And that's out of a target estimate of about 400 drill holes that we need for that shallow resource definition. So as I mentioned, the clock is ticking down on this. Out of the 308 drill holes that are in this central portion of the LP fault, this shows you the incredible consistency here. 95% of them have intervals over 0.5 gram per ton gold. It's important when we're talking about that bulk tonnage mineralization. 94% have intervals with over 1 gram per ton gold. It's basically the same number. Basically, when you're in the zone, you're seeing very similar mineralization over kilometers of strike length. Pretty incredibly here, 85% of these drill holes have over 3 gram per ton gold intervals in them. And, that shows you, once you're in the zone as well, there's that sort of moderate grade component to it, which is incredibly widespread. But these are the numbers that really get interesting when we start talking about the high grade domains. And what you're looking at here is over half the holes, 170 out of the 308 holes, have over 10 gram per ton gold intervals in them on a scale of kilometers. Right? And out of these holes, 109 holes, or 35%, have intervals of over 30 grams per ton gold, and that occurs across kilometers. That's an ounce per ton, roughly, of gold. And you could see these sort of results again and again and again, and that predictability along strike. I'm not aware of comparable discoveries that have these sort of consistencies on these kind of scales. It's absolutely been incredible, a real privilege to work on. And it was amazing on site just last week and the week before, talking to the geos that are logging core. We're able to drill, when we step down below existing areas that we've already drilled, or we're within gaps in the drilling, 75-meter gaps, 100-meter gaps in the drilling, we keep hitting the gold zones within a few meters, sometimes, within fractions of a meter, often within 2 or 3 meters of where we have projections made from areas that we've drilled into areas where we haven't drilled. And that predictability, like you can set your watch to it. It's been incredible to see that come together. So what are we going to be doing with all this data? What are we doing with this data right now? Well, we're doing this sort of block modeling, these kind of exercises. It's very much a work in progress, but what's it going to look like? Well, I took a couple examples off the internet that I like. A project that I follow is Osisko's Windfall project. And, you can see it's a high grade underground type resource. It's got nice economics attached to it. And you can see that they're doing all this block modeling work, and they've got a pretty big discovery on their hands as well. So it shows you an example of a project that's a couple years further down the road with some nice results and a big system that they're doing a lot of modeling work on now. Another one to give you a finer scale view of blocks is Corvus Gold's Mother Lode pit. I like this one because back about 15 years ago, I was standing here in this pit taking rock samples off the side of that pit wall. And I always remember the rocks because they were lake sediments that were interspersed with volcanic deposits. So you could see leaves and other fossil forms within the lake sediments. And I remember telling my employer at the time, Imperial Metals, that these sort of predictable trends could be targeted for follow-up drilling. Of course, we didn't actually own those claims at the time, which was something interesting. These guys, Corvus, have ended up doing a lot of exploration work here. But it shows you what that sort of, when you're closer up, zoomed in, how that block modeling process looks like. And this makes me laugh a little bit, this slide. So I thought, well, we can't show you our block models yet. It's a work in progress. There's different groups working on this. But I wanted to show you where we were sitting just a year ago. So say it was June of 2020. We had about 100 drill holes in the LP fault. And this was the kind of image that we had forming in front of us. You could see the general outlines of what it was, but there just wasn't enough drill density to be able to determine exactly what we had. We knew it was big. We knew there was high grade. We knew there was, say her face is high grade, and you could see the bulk tonnage that's located around that. And, but what we're getting towards right now, this should be us by the end of the year. So you can see the Mona Lisa is coming together here. And, I kind of laugh because, of course, I didn't have a picture of the block modeling to share with you, but I had to pick something that was maybe, not quite as beautiful as the LP fault, but, people would generally recognize the value there. So I picked the Mona Lisa. So anyway, so here we are. By the end of the year, we should be at about this point here. It should be enough information. And that's the point here is enough to evaluate how this thing would look in a mining context and really what the sort of mining parameters that you could put around it. And we think that'll happen around that 400 drill holes. The thing that I want to emphasize, and I'm going to point that out right now, is you do not want to do more drilling than this if you don't have to. Because if you can see accurately that that's going to lead to that, you do not want to drill off this level of detail because that costs a great deal of money. So every company in the mining space's goal is to drill the minimum number of drill holes possible in order to see a high resolution picture of the deposit that they found. And that means that when you see tight drilling on a project, it means there's issues with continuity. When you see widely spaced drilling on the project and it's showing you that you have, say, indicated, inferred levels of resources, measured and indicated levels of resources, if you can do that on wide spacing, you absolutely will, because you're spending less money to get the same product and have an accurate vision of the project than otherwise. But if you have to drill it really tight, which is many mesothermal gold deposits, Red Lake, elsewhere in the greenstone belts of the world, all across Canada, it's because the gold goes in and out. We don't have that problem because we have that high degree of transposition, and the gold that we're seeing is more predictable. Another thing that I wanted to share with you, and this is quite interesting, is how companies disclose data and how Great Bear discloses data. So what I did was I selected, these are drill results from our discovery hole, DNW11. So this was back 2 years ago now, just exactly 2 years ago, pretty much. And you could see you get a couple meters of 200 grams, within that half a meter of 750 grams, 14 meters of 12 grams. We got very excited when we found it and put out the imperial measurements. So here you'd have, a 1.5 feet of 24 ounces per ton gold, for instance, or you'd have 45 feet of 0.4 ounces per ton gold. And of course, around that you have, let's go back to a metric here. So you'd say you'd have 50 meters of 0.75 grams per ton gold. That's one of those low grade domains. These are high grade domains. Well, it might surprise you that if we had different disclosure criteria, this would be the number. that we would have reported to you. 111 meters of 5.42 grams per ton gold. I bet you if I put that number out today, it would pop everybody's eyes open, and they would, they would really step back, because these are the kind of things that you just don't see very often. But it comes down to how you disclose this. And I actually would like to show, I get asked a great deal, what does the high grade look like? And what does the low grade halo on this look like? So I'm going to share something else with you. So I'm going to share this spreadsheet with you right now. And this spreadsheet is actual data from that DNW 11 hole. So you can see every assay interval. This is gold. This column here is gold, and this is the width of every interval. So what you can look at as you go down here is assay results, and then you can go down and see how wide it was in the column beside it. And if I take from here where we get the first good gold number, all the way down to the bottom, you can see there's a lot of low-grade material in here. So you go from 169.6 meters down the hole up to right near the surface here, up to, let's see, 58 meters from surface. If I just take the average of that, I get 111 meters of 5.43 grams per ton gold. And some people might be interested in that, but what it shows you, that doesn't have any internal criteria in terms of how wide, how much waste you can include in an interval, and it doesn't have any capping. And capping is an important factor when you do mineral resource disclosures. So within this zone, there's a couple of high grade zones. So from 58 meters to 60 meters, you can see the numbers that we got, 750 grams, a couple grams, 7.5 grams, basically. So that equals about 2 meters of 194 grams per ton. The next one is from here, from 75 meters to 80.55 meters. And you can see the gold in there is consistently higher than some of the stuff around it. And you can see there, that'll yield, when you look at it, 5.55 meters of 25.9 grams per ton gold. And when you look at the way the gold is distributed in here, I'm going to show you the low grade as well. So from 80.55 all the way down to 169 meters. I mean, if you look at the assays that we see in this halo, you can see 0.15, 0.14, 1.24, 2.96, 1.6, 0.5, 0.87, 2.14, half a gram, 2.5 grams, all the way down. So you see this sort of these number sequences repeated again and again. I will point out though, within this, as you're looking at that, this wide halo of low grade, there's one high grade portion in there. It's 27 grams. So capping in a mineral resource estimate is basically when you look at these intervals. So look at the high grade here. I'd say, well, there's a 19 gram sample, 2 grams, a gram, 7 grams, a gram, 60 grams, 130 grams, 26 grams, and about 10 grams. Well, you might decide that when you're going to recalculate this, you don't want to have nuggets, impact the gold intervals too much. You might cap this at, say, 100 grams. So here's your uncapped, 5.5 meters of 25 grams. If I cap that other one at 100, it might be 5.5 meters of 22 grams. Similar with the lower grade material that occurs around that, I might take this one and I might cap it from 27 to say 10 grams. That would take my interval from 89 meters of 0.81 to 89 meters of 0.62. This is the kind of work that we're doing right now with resource modeling experts in Great Bear. But it also shows you, we have data from hundreds of drill holes, and each one of the high grade domains and the bulk tonnage domains will have different capping levels within it. As we drill more, we get more and more information about that. But I also wanted to show you, as you run through these intervals, that it is wide halos of lower grade mineralization. These are all meter to half meter wide intervals around it. And it's showing you that grade just continues again and again. So there are legitimate wide halos of low grade mineralization around the high grade in this hole. And let's start sharing the presentation again. So once again, if I just took a numeric average of all that gold mineralization, say I took it all out of the ground, homogenized it and ran it through a mill, this is pretty much what I would get, right? But when you do a resource disclosure, you'll include capping within that as well. Now, a few of the things that we do as we're drilling off this resource that I want to make sure that people understand, and this is actually useful if you're investing in any company in the gold exploration space. So one of the things that you can do is look at pictures of the drill core that the company puts out. And what you don't want to see is this. We actually I went digging through with Bob in core photos because we don't do this. And when we do it accidentally, we have to change drill direction. So, but once in a while, you'll find a little vein. Here's a gold bearing vein that actually occurs fairly close to the core axis. So if you look at the drill core, the edges of the drill core extend this way and the vein runs right down parallel to that. So it's possible. And, look at, any company in the space that you're interested in, look at the pictures of the core. If you see the veins running down the core axis, you can see this kind of thing happen. And we don't do this. We'll show you all the data in a second. But say that you have a meter wide interval. If it runs parallel to the core axis, you might be able to, say report a 30-meter interval of mineralization, in which case you've exaggerated the grade by like 2,900%. That can really be misleading for investors. What you want to do is this, and you see this again and again with Great Bear. This is an example of pretty much the worst grade exaggeration that we see. Whereas you can see that the gold is distributed like this, and you end up, instead of drilling down it, which inflates the thickness, you drill across it, right? And that reduces the thickness. So this would be common if you had, say, a vertical gold zone and you were drilling 45-degree angle hole. This is about what you would see. So you might have a true thickness of 15 meters, but a reported length of 30 meters, and the exaggeration of thickness is 100% on there. What we usually see with the LP fault is somewhere between that level and about this level. And this is an example here where you have, say, a 20-meter wide interval, and you've basically drilled perpendicular to it. So you've minimized the thickness, and you're minimizing the difference between the true thickness and the reported thickness. So say the true thickness was 17 meters, the reported thickness is 20 meters, you're only exerting the thickness by 17%, or in other words, the true thickness is 83% of the actual thickness. So here we go, and this is an example again of LP fault drill core. So you'll see a lot of the fabrics when we show the core will be between about this and somewhere between about this. This is about as exaggerated as it gets. That's about as close to true thickness as it gets. And then we show this visually. And these are the kind of things, when I invest in a mining company, I want to see these kind of levels of disclosure, and you guys should demand it too from the companies that you're looking at. So what we started doing, we started the process about 9 months ago, a year ago, and we've done more and more of this disclosure. It's disclosing every assay interval, every assay interval within the highlighted drill intervals. So we've done this on many sections and many long sections now. The other thing is put a lot of cross sections out. The best way for a geologist to understand what's going on in 3D is cross sections. They stack up parallel to each other like a set of playing cards, and it shows you how the grade is distributed section to section to section. It gives you the continuity between drill holes and the continuity along the deposits as you're looking at that. So show the sections at different scales, show every drill hole on a section, don't skip bad ones or historic ones. This allows, even if you're not sure about the true thickness, the reader can see, well, are they drilling like this, like I said at the beginning, or are they drilling across in order to minimize width exaggeration? Of course, you can see we're drilling across again and again and again for hundreds of holes at the LP. And then, like I mentioned, provide complete assay disclosure on your highlight intervals, because you want to see, did all that gold come from one sample that's, say, 2,000 grams per ton, or is the gold distributed like we see over the wider intervals? It's just something to look for. And here we go again. In long section view, we did the same, and we've done this again and again. You can look at highlighted intervals. What does 5 grams over 78 meters look like? Well, that's what 5 grams over 78 meters looks like. You can see the individual assay level disclosure running down that interval. What does, or actually this one was, I think this is 15 meters of 19 grams. That's what it looks like. And then this one here is, I think, I don't know which one this is, 164. So there you go. So you get, you can see the high grade there, and you can see the distribution over the width. So it's complete assay disclosure, and this is useful where you have key drill holes. And of course, what we've been doing is describing the high grade domains within the deposit. I'll touch on this. Bob's going to touch on this. So one of the things that we've done over the last year as well is attract the people that we need to really bring this project all the way over the finish line. You can see that we've added some very key people at the board level, like Mike Kenyon, Paula Rogers, and Gil Lawson. Collectively, a lot of mine building, mine financing, and mine operating experience here. And recently, we added a couple of people. This is Daryl, and that's Jenny. They were just announced last week, and this is them out on site with me about a week ago. We're looking at some of the drill holes and the casings that are left over from the hinge zone holes that we drilled a couple of years ago. So looking at the project collectively for the first time. So it's a good message that we're very serious about advancing the project as far as possible, and we're bringing on the people that we need to do it. And this is a little bit of kind of funny commentary that I've heard over the last 2 years as we've been doing this. So, and we showed this figure in our last news release, and I thought it was a pretty good one. So you could see 2 years ago, there was some historical drill holes that weren't assayed into the LP fault. There was our original discovery hole, DNW11. I just showed you the actual sub-level assays for that, every assay interval for that. And of course, we began drilling in some of the low-grade halo and then expanded that into the higher grade material. But there we were initially, and the kind of comments that we were getting is, it's just a few lucky holes. If I had a nickel for every time I heard that. Or this one, the Confederation rocks, they just don't have the real gold zones in Red Lake. So I guess this isn't a real gold zone. Or this one here, this was especially common. The guys that drilled it before say it's bad, or variations on that theme. So it shows you that, in the industry, it's always possible to make a new discovery, but you really have to be objective with this and follow the data as it comes in. As time progressed, the tone began to change. It was harder to deny, let's say 100 drill holes on the project, that it was a major discovery. But I heard some real zingers, like, for instance, they're drilling cross structures. There's nothing between the intercepts, so it'll never hold together into a real zone. Or this one really got me. And you heard this a lot, even in Red Lake early on. It's impossible to have continuity on that large scale in Red Lake, because I know Red Lake. A lot of people have mined in Red Lake, and they're used to drilling things off on 6-meter spacing. Well, this has changed as well. As people visit the project and more geologists work at it, they realize that's not true. This was funny. I can't see how you'd mine this. The grade is too spotty. Anyway, definitely not the case. Or this one, the LP fault is only low grade. Well, each one of these dots is an intercept that's over 20 grams per ton. As I mentioned, if you're looking at this, fully a third of the holes have over 30 gram per ton intercepts, and over half the holes have over 10 gram per ton intercepts in them. So the LP fault is only low grade. Let's just get that one off the list, but I've heard it many, many times. Or they're drilling all the holes in the same place. Well, that's 4.2 kilometers of strike length there, and we've drilled for over 11 kilometers. So I don't even know where that kind of thing comes from. And then probably the most asinine of comments in recent history, they've found all the gold. This is all just infill. No. Bob will talk about that in a second as well. And of course, they're going down the Lassonde curve. Kind of funny, because to even have finished going up the Lassonde curve, we would have had to have generated an initial maiden resource estimate and probably a PEA or something like that. And in this case, we're still in the getting bigger and bigger and bigger stage as we continue to expand it and we continue to fill it in at the same time. It's definitely not all infill that's going on, and I'll just emphasize that. So something on this scale, what should we expect to see? So I was looking at some of the corporate materials that Kirkland Lake put out when they acquired Detour. And Mike Kenyon, our chairman, used to run Detour, so we're quite familiar with the deposit. And I thought I would show people, like, on the scale of kilometers, each one of these squares is a kilometer long. What would you expect to see for continuity on a big monster deposit? So Detour Lake is one of the biggest on Canada in terms of what it's going to generate for an open pit resource. Well, this is what the gold looks like at a 0.5 gram per ton cutoff. So you only see colored information in here if it's more than half a gram. And you can see it doesn't look like a continuous sheet of mineralization. It looks like a real patchwork, right? So, but regardless, you can see that there are enormous multi-kilometer open pits designed around that mineralization. And of course, it's open as it goes to depth. So this shows you what you would expect to see when you have a very big deposit and you have a cutoff of about a half a gram or so. That's what you have. It doesn't have to be a continuous sheet. So despite the fact that we see this very good continuity at the LP fault, that is not a prerequisite for large scale bulk mining. That's just a very very, very good feature to have. Where you do see very good continuity is Hemlo. This is the closest deposit that we have to Great Bear's LP fault. And while the cutoff here is 0.5 grams per ton, the cutoff here, the grade shell cutoff, is 5 grams per ton. So 10 times higher grade. That means, of course, outside of this, you do get lower grade material. But the size here, that's a kilometer long there. So you've got about 2.6 kilometers of largely continuous sheet-like mineralization. But even within that continuity, it's not 100%. This isn't a rectangle, for instance, that every drill hole you put in has all that high grade in it. It is patchy. It has this irregular geometry. You can see that. And this is the kind of thing, as we drill off Dixie, we're sure we're going to see controls on plunge directions. We're sure we're going to see other stuff like that. And we're sure we'll see areas where there isn't the high grade gold component. But at the same time, this is the best example that I'm aware of for continuous high grade gold mineralization. You can see it does have continuity over kilometers, but it isn't a homogeneous sheet either. So it's just sort of about managing expectations. Now, what you see when you look at this is a view down on the low grade bulk tonnage domains and the high grade material within that. You do actually see very, very good continuity at Great Bear at the LP fault. And that's just an example showing that visually. That's about half a kilometer of view there, one of the high grade panels that we put out recently. And why is it so high? Why is it so continuous? Well, this is an example last week when I was standing on mineralized outcrop that we've exposed on site, why that mineralization is so pervasive and why it's so consistent. So this is water that we dumped over the outcrop so you could see the rock. And you can see when you look at the structure, the rock is heavily transposed. There's no original bedding left in this thing. And you can see that that gold-bearing fluid is worming its way through these rocks, and it's basically mineralizing every little contact, every little structure, everything that it's doing. So you're looking at effectively mineralization over a uniform volume. And that's why you get that consistency. So here's a closer up view. You can see there's nothing left. You can see folded remnants of the beds and other geology changes that were in here. They are completely transposed. So what you're seeing then is the gold-bearing fluids coming up, and they're selectively mineralizing huge volumes, hundreds of meters of this stuff. And that's what it looks like. If more of it was exposed at surface, you'd see that uniform alteration, the hundreds and hundreds of meters of alteration around it, and of course for kilometers of strike length. And then what you see in terms of the high grade is that gold is concentrating in these big continuous shear zones and along geological contacts. And we've recently put a few of these out into the market so that people could look at them. BR1, BR7, and ORO20. But again, there are 17 of these domains that we're working on along kilometers of strike length. There's an image of the 17 actually down there. Now, of course, I started getting calls after we put these out, analysts, investors, and others doing ounce calculations on these panels. And I think that's great. Keep the true thickness kind of stuff that I was talking about in mind if you want to try to do that. But also realize that these were not the entire domains that we disclosed. So, if I look at, where's the image up over here? So the first one that we put out, this is BR7. This is only a portion of what's been drilled. There actually is a lot more drilling that's gone down below that. There's a lot more drilling that's gone in strike, beside that. So these are just portions of what's been described within these high-grade domains. It's not the entire high-grade domain. So keep that in mind if you're trying to wrap numbers around it. Keep in mind also that when resources are ultimately calculated, there will be caps, like I was showing you with the spreadsheet there for DNW 11. There's also areas where if you look at these, that they're just not drilled yet. There's no drilling there, there's no drilling there, there's no drilling there. That could use a drill hole there. So they're not done being drilled either, which is why there's no resources calculated out on them yet. But we want to give you an idea just how impressively continuous this mineralization is, and that we're seeing it on so many of these different features. Now, trying to understand the relative size of the LP fault, This is one of the hardest things that I have to do in my day-to-day life is talk about just how big this thing is. So what I did was this is the image of the map that everybody's familiar with. So we look at this, it's a map view. You're in space, you're looking down on the deposit or the mineralized system. I guess we need a resource before it's a deposit. And you're looking straight down on it, basically, or inclined 10 degrees. Well, here's a comparison. And I had fun doing these last week when I was sitting in it was the Five Lakes Fishing Lodge in Red Lake, Ontario, and talking about that with the owner, Ian Cook. And I was trying to explain the size. And so I went back, I got Google Earth out, and I started doing some overlays of this. So here's Toronto. If you look at that and I overlay the zone, and again, this is not the total zone. This is half of it where we're doing the detailed grid drilling. There's another 6 kilometers off on the other side. But basically, if that zone was in downtown Toronto, you could walk from Ossington Avenue and all the way across downtown Toronto, all the way over to Parliament Street. You would have crossed Bay Street, Spadina, Bathurst, and the whole thing. And everywhere that you were walking or drilling or sampling along that, every single sample that you took, we would expect would have the gold mineralized system in it. And that would take you an hour. Like I've done this walk before when I've been in Toronto for conferences or whatever, I need a break. You can walk across the entire downtown, be walking for an hour, and literally based on the 318 drill holes that we have so far, every single place that you sampled in the ground, you would expect to see the gold mineralization, and you would see high-grade gold mineralization, across kilometers of strike length as you look at this as well. And of course, down here at the Sky Dome would be the Dixie limb and the hinge zones, for instance. Or if you look at Vancouver, this is where I'm sitting right now. I guess I'm about here. So if you look at that and you do the same overlay, you go from the other end of Stanley Park to Rogers Arena, which is right there. And the same thing, everywhere you walked for an hour, it would take you about an hour to walk that. And everywhere that you sampled, you'd have gold mineralization along the LP fault without fail so far in 318 drill holes. And of course, down by the water here, you'd have the Dixie limb and the hinge zone beside that. Or I thought this one was kind of fun too for our American shareholder friends. So there's Central Park in New York. It's huge. Like if you walk across Central Park, it's going to take you an hour to walk across Central Park easily. And when I look at this, there is the LP fault zone superimposed on Central Park. Weirdly enough, they're almost exact. The grid drilling area that we're doing at the LP is almost exactly the same size as Central Park. And here you'd have down in the city, you'd have the Dixie limb and the hinge zones. So that's 4.2 kilometers, and about the width as well. They're almost exactly the same. It's like weirdly coincidental. But anyway, anybody that's been to Central Park, anybody that's walked across Vancouver, or anybody that's walked across downtown Toronto will have a pretty good idea how big the system is. And again, it's not the whole thing, just that central dilated area and how big that is. And this sort of answers the question of why don't you have the resource drilled yet? Well, because it's huge. And this is just the top of the system. If you think about it in 3D, say that would be the Central Park, boundaries, along the surface, it's about the same size. You could see these high-grade panels of mineralization that we've drilled off along the middle of the LP fault, hundreds of meters of mineralization around that, which is the low-grade halo. Actually, on this little image, we've now drilled that gold down there as well, which was out in news releases a couple months ago. And then, looking at it from different orientations in 3D. So you have to think, even with 6 drill rigs going full time, it takes a long time to delineate something of this volume. And I hope that you can see in the 3 dimensions here that we've only drilled it down. The deepest drill holes are about at that level now, but the system just keeps going. So it will be physically impossible for Great Bear to drill off this entire system in hopefully my long lifetime because it's so big. And we can drill the top though. And that's what our aim is to show you what that initial mineral resource estimate is going to be over, say, the top 400 meters of it along 4 kilometers of strike length. And that should give you a pretty good idea. The other way to think about this for size, if you're in Red Lake, say, or you've worked at that mine, or you understand a big deposit, would be to compare what we've drilled so far at LP along 4.2 kilometers to the Red Lake gold mine. So that Evolution bought, and this was the driving force behind Goldcorp's growth. So it's about the same length. The area that we're grid drilling right now is about the same length as the the Campbell and Red Lake mines in that area. And you have to think, like, in terms of how much gold you'd be able to define ahead of time. There's 25 million ounces of gold that have been mined in this deposit, right? We don't know how much gold there is in ours yet, but we're figuring out right now this top sort of 4 kilometer by 400 meter area. And if you drew that over the top of the Red Lake gold mine, would that be a comprehensive description of how much gold there is in the ground? No. There's absolutely no way that an initial maiden resource at the Red Lake gold mine or at the LP fault at Dixie is going to comprehensively show you how much gold is in the ground. What it will give you an idea is initial economics and the other parameters in the near surface. But they never had, for years of mining, 80 years of mining, I don't think they ever had more than about 500,000 ounces of gold defined ahead of the mining here until quite recently. And of course, Evolution has done some excellent work redefining what's in the project. But this, the deeper mineralization that you're seeing, would be like the equivalent of us just starting to drill those deeper holes here. And Bob will go over this in detail later. But a few of the differences are, here at the Red Lake mine, average mining widths 2 or 3 meters. Maybe if you drill within an ore body, you have about a 50% hit rate, a 50% miss rate. And of course, you've mined it down to 2.5 kilometers depth and generated 25 million ounces of gold. With what we're looking at here, it's a continuous gold zone across kilometers. You haven't missed it in, like I said, in these holes. You have high grade within a low grade halo. The low grade halo is just not really present here in anything like the same way. You have up to hundreds of meters of that bulk tonnage kind of stuff. The high grade zones are probably similar, 2 meters, maybe up to 20 meters wide, and very good connectivity, very good success rate. And of course, this was just discovered a couple of years ago. But what's really cool is here's some cross sections of the Red Lake gold mine on the left, and of course the Dixie project on the right. And on the left, I'm going to draw this cross section goes like right here through the high grade zone discovery. And on the right is the cross section. It's going to run right here through the middle of the LP fault and the adjacent zones. What you see in the Red Lake gold mine, just for comparison, it's what people are used to seeing in this area, is 2 to 3 meter wide zones typically. And these little red, these are the same scale. These images are exactly the same scale. So you see these little red, these are veins of high-grade gold mineralization that plunge down to depth. Here over the high-grade zone, there is nothing at surface defined. And you might have a zone of like 100 meters or a couple hundred meters where those veins are going to be found within. You can see them there, quite narrow. Here on our project, you have a 1.5 kilometer wide dilatant zone. If I put that over here, that's like that. You'd have a dilatant zone of like 1.5 kilometers width, where we have the Dixie limb zone, we have the hinge zone that you see going down, and of course we have this wide zone of the LP fault with the high grade concentrated in the middle going down like that, and that bulk tonnage mineralization going on the side. The scale of these things in the width dimension is completely different by orders of magnitude. Right? So this is something that's also hard to convey to people that have not worked at both, but we have geologists that have worked underground here and are now looking at this, and there's absolutely no comparison between the scale when you're thinking about the width of this system over here. Although looking again here, there are comparables in terms of strike length. You might consider the Cochinor shaft sort of like the Dixie limb in the hinge zone, sort of a peripheral kind of thing. But the main body, we're just drilling the surface, and the strike length is similar to what we're looking at with that major deposit. The other way to look at it is terms of bulk tonnage mining. And this is a slide we've had prepared for some time, and I like it. I was talking with Mike Kenyon, our chairman, about it, and he was saying, well, Chris, people might like to see some simple overlays of what a big open pit mining project looks like compared to what we're looking at the LP fault. And this is the outline of the Malarctic open pits, the biggest one in Canada, and that's the Malarctic open pit superimposed on the LP fault. You can see they're very similar in terms of the strike length that we're drilling off right now and the strike length of that pit as well. So it's showing you sort of that big potential size. And if I hadn't seen this done before, so I took long sections from the various companies that are developing these deposits, and I put them all at the same scale. So they're all in the same scale in this image. So the red bars are all 1 kilometer long. There's Detour Lake, a big $4.9 billion purchase. Here's Hemlo, probably worth, $10 billion plus. It was just a awesome producer over many, many years. This is Osisko's Windfall deposit. Again, I like this one. It's high grade and definitely expanding. Those guys have been doing a systematic job just building it out. And here is Malarctic, which is, it actually kind of looks, if you're a science fiction fan, a bit like the Starship Enterprise. There's some warp nacelles and there's the saucer section. And anyway, bottom line is, here's the open pit component of that. That has similar dimensions to what we're looking at here. And there's the underground mineralization that's being developed. The difference here is that's a 5 gram per ton cutoff. That's probably 2 to 3 grams. And this is about 0.9 to 1 gram. And this thing here is much higher grade. I can't remember exactly off the top of my head, but 10 grams plus when you're looking at Osisko Windfall. And of course, what we're looking at is a combination of something like that, something like that, something like that, something like that, all kind of blended together with that bulk tonnage around the high grade. And the scales here show you we definitely have the physical dimensionality to develop a major deposit. So, and I'll just go through this quickly, so this is who owns GBR. Well, the biggest shareholder is Rob Cohen in 1832 funds. Him and Avoyka made some very good decisions early on and recognized the value of the project by actually going into the field and having a look at what we found. We had Joe Foster from Van Eck come in. And in the last placement, we had 15 institutions that participated. And this portion of the pie, the institutional, is getting bigger and bigger. Recently, we had the Sprott Junior Gold Miner ETF come in as well. So they began accumulating a position. And if we look at where we're sitting, again, we have 57 million shares out, 61 fully diluted, cash of about $90 million, and a growing roster of institutional investment. In terms of analysts, what do these guys think it's all going to be worth? Well, I believe what you're looking at here is targets between about $22 and $36 a share. That's not the entire Dixie project, right? They are trying to give you information based on this, the upper portion of what that system is going to develop. We don't know what's down here other than the fact that we've started to hit the same gold down there. That isn't yet defined. So they're trying to give you an estimate off what the system has in the near surface only. And they're anticipating that just based on that, it has the opportunity and the potential to be a major industry-leading discovery. So this is why they're getting their share price targets of, say, $22 to $36 a share. One of the ways to look at this is sort of in that PNAV valuation. And despite the fact that Great Bear has done quite well, if you look at the share price, relative to an index GDXJ, obviously Great Bear has outperformed. But we're actually undervalued relative to the group of peers. And Callum and I talk about this all the time. Callum's a numbers guy, obviously our CFO and VP Corp Development. But when we're looking at this, we have about a 0.42 times PNAV. An industry average for this group of developers would be about a 0.6 times PNAV. On the M&A side, for companies that have been merged, taken over recently, they tend to get about 0.8 times PNAV, which is about double what we're currently sitting at in the market. And then these tier one transactions, which are the proverbial rare as hen's teeth, they're looking at basically 1.4 times PNAV. So somewhere between about double the value that we're looking at now and about 3.5 times the value that we're looking at now if we do indeed have a tier one type discovery in our hands, which is what these analysts, think we have the potential for. And what is a tier one mine? I know we've beaten this one to depth. Certainly the market does because everybody talks about it. But generally it's 500,000 ounce potential for deliverable of 500,000 ounces of production a year for a 10-year period of time. There's only arguably 17 to 30 of these on the planet in total. And if we have found one of those, it will be a very, very rare event for a company of our nature. And these are valuable. Like they have a very high per dollar per ounce in the ground value. And when you think about that on an average of about $265 an ounce in the ground for one of these tier one assets, that shows you why they get these sort of multi-billion-dollar valuations as projects. It also shows you if you back calculate from there, we're sort of looking at Great Bears being valued today like it has potential for 3.5 million ounces of gold, which Anyway, I just think that's not accurate. But anyway, we'll have to show that with more data as that becomes available, and we continue to deliver high-grade domains and drill results and drive everything forward. So what are our goals for 2022? And I'm just going to wrap this up, and Bob's going to start talking. Well, we want to deliver an optimal near-surface resource with strong economics or strong economic potential based on the high grade and the bulk tonnage. We know it's not possible to drill the whole thing off because that'll take decades, most likely, due to the system size. But we can drill over the first 400 meters from surface and give you a pretty good feel for what a meaningful prelude to the total project value is that way. And of course, we don't like drilling for its own sake. It's just a waste of money drilling more holes than you have to. You want to be able to preserve that share capital and money for your investors. So just catalysts. I'll wrap it up and hand it over to Bob. The clock's ticking. You know, we're running out of time here. We're almost done that initial near surface drilling. We could be looking at a pretty good value proposition once that's done. So shallow drilling, resource publication is coming in early 2022. I would imagine a PEA will follow not too far behind next year. We'll keep releasing that gold domain information, less or about 100 holes that we still need to disclose in 2021, probably about 50 holes that we want to do in the Dixie Limb and Hinge zone in that time as well. And of course, all the background work is ongoing on the project, that environmental permitting work and everything. So with that, I will stop sharing and stop talking and leave it up to perhaps more interesting people to continue the conversation. So Bob, are you around? There you go.
Yeah, hi, just a quick sound check. Can you hear me?
Yep, we hear you fine, Bob.
Yeah, perfect, good. So Chris is gonna stay online with me here to make some commentary while I'm sharing. And I'm gonna be sharing the actual 3D model of the project, and the software that we're using is a really advanced piece of software that does an incredible job of showing rapid 3D modeling. One of the issues with it though is you may find a lag on your side of the screen. So for the viewers that are watching, you may see a little bit of a lag, and so I'm going to add some pauses and just allow a little bit of time for the model to rotate to just allow it to catch up depending on your internet connection. We're looking here at the project, an aerial photograph view of the project and the outline of the claims. And I want to talk about a few points that Chris brought up in his presentation, and also some of the questions that we get over time, and about resource potential, and when can you do a resource and why haven't you done a resource? And before we can answer some of those questions, one of the guiding principles of calculating a resource estimate is, does it have a reasonable chance of economic extraction? It doesn't mean you have to put numbers and dollars on it on day one, but you do have to have a chance that you can extract a gold deposit out of the ground without any real hurdles. And this is a great view to show, because it does show where the project sits relative to the ground and what the ground conditions are. And Chris has already highlighted that we're 15-20 minute drive from town, and that the project sits near the highway and there's power lines. The geology, and you can see the drill holes are just starting to show up here, where the LP fault sits and where the hinge and limb zone sits relative to the claim boundary is right in the middle. It's not under a body of water, so it meets that initial criteria of a resource estimate. That does it have a reasonable chance of extraction? Absolutely it does, because of the lay of the land and where it sits. And what I want to do is walk through a more detailed technical presentation of the 3D model, as if we were looking at this, if I was going to show it to a new geologist that we hired on the project, and I had to explain to the new person what we're looking at and how we found it and why we are excited about it, and really what's driving the exploration program right now. So I've shut off a few layers here, and we're just looking at this as if we're looking at it from outer space, at all of the drilling that we've done on the project to date. And for disclosure reasons, we're only looking at drill holes that have been released into the public domain as of the last news release here. You're not seeing any of the pending drill holes. It's always been our practice from day one to not disclose things like visible gold and whatnot that we've yet to assay. So you're only seeing here that information that's in the public domain, and we're comfortable with sharing this information with everybody that's logged in. What we're looking at here in the orange shape is the what we call the marker sequence for the LP fault, and it's what defines the southern edge of the LP fault. Everything to the north of that, to the top right of that orange feature, is mineralization in the LP fault, and the mineralization to the south of that, to the bottom left, are the hinge and the limb zones. And we're looking here at gold values. And I want to just rotate this view so we can look straight down that orange feature, because it changes the view. It allows us to see things that we normally don't see because of the view angle. But when we look straight down it, we can start to see zones lining up. And I want to walk us through what the assay data, what we see on a daily basis in terms of how the assays relate to each other. And one of the biggest criteria in a resource estimate and in defining the edges of a zone or a deposit is, what is the distribution of the gold? And if all you ever looked at was pure and simple distribution of gold values, you're tempted to draw lines, and you're tempted to join those gold values up and say that this zone is continuous from here to here based solely upon the gold values. And in a resource estimate, that's not a reliable criteria. Of course, gold drives everything, but just having gold in one drill hole and having gold in another drill hole, simply drawing a line between those two drill holes, does not constitute reasonable criteria for a resource estimate. So we've added to this model from day one geological criteria, these high-grade domains, these low-grade domains, and how they all fit together. But I wanted to just step back a little bit and show you that if you had this database today and you had the ability to review it in 3D, this is what you would see without really any geological criteria. And I'm going to just zoom around here a little bit. And again, I'm going to respect the lag that some people may be experiencing here. If I rotate this view and just start to line things up, you can start to see lines of assays here. These are just simple, pure simple gold assays.
Is this a 1 gram per ton cutoff, Bob?
No, that's, I'm going to keep that secret for a minute here, because I want everybody to sort of see the lines that we're drawing here, and how I could interpret this if all I had was just pure gold numbers. And I would sort of speculate and say that I'm going to just try some annotation here, and Chris, just let me know. I'm going to try that again.
Yep.
1 second here. It's not disappearing my taskbar here, but I'll just have to live with that.
Yeah, exactly. That's okay.
Yeah, it's okay. So I'm going to just very quickly on here draw a couple of lines for you between some assays here, and just say, okay, if all I had were assays, I would sort of argue that these are probably structures and controls to mineralization here that may or may not be real, and we need to drill more and we need to understand them better. Now we're looking here at all samples drilled to date greater than 100 grams per ton gold. And it's a big filter on this to say that there's continuity at 100 grams and higher across several holes. And when I zoom into one of these here, you'll see that there's several holes in between that don't have 100 grams. And this is a great example here where you've got 156 grams at one end and 126 grams on the other end. And the distance between those two drill hole intercepts is about 200 meters. We're looking at 75 meter squares on the screen here. And it's easy to argue that those may or may not be continuous zones. And I'll zoom over here to one of our stronger domains, which we haven't really talked about in the public domain yet too much. But here's another one here where we have several samples that meet that 100 gram and higher criteria across almost 300 meters of strike length here. The key here is to say, well, what's causing these domains to apparently link together? If we threw out all the geology and just ignored it, what's causing this continuity of these higher grade domains? And 100 grams is a really, really high cutoff. Sorry, 50 grams is a really, really high cutoff. If we go to higher than that, at 100 grams, we're here. We still see those numbers at 100 grams. We go down to 50 grams per ton, and we start to see these domains, some of them get bigger, and we start to infill some of the gaps in between what was originally, you know, a line of just sort of three holes across a couple of 100 meters, we start to fill that in.
Hey, Bob, how big are the squares on the screen right now?
They're 300 meters across. Each square is 300 meters by 300 meters.
Okay.
Yeah, and that it's an important detail in the size that we're dealing with here, because in a normal situation, you know, let's look at the hinge zone, for example, and just quickly zoom into the hinge and the limb zones here. And the hinge zone is a very robust vein system. Its entire strike length right now is about 250 meters if you use that 50-gram filter as an example. Compare that to the LP fault over here, which is, you know, just in terms of size, is much, much larger. If I drop my filter down to 20 grams per ton, we start to really fill in those domains. And where originally, I'm going to zoom back into here, and again, I'm going to go a little slow, where originally I said, well, we have a number of holes in between these domains that aren't hitting anything. Well, they are. In fact, this one hit 47 grams. And this one over here hit 23 grams. So we start to fill in some of these higher grade domains. And when we first started to drill the project, we started to question why we're seeing these linear features. What are they, and can we predict them? And the geologists in the field do a great job. Every day the core comes in, they analyze it, they look at the core angles that they're seeing, and they attempt to predict where the next hole should be drilled and how far away can we go and still intersect that domain. And when we started to put these domains together, we started to develop these high-grade domains. And these are the domains that we've talked about in our last couple of press releases. And we've developed these domains based on very detailed geological criteria. They all have to fit the rules. And so the rules in some cases are, there's a structural element to it. There's a high strain corridor. There's a, you know, from hole to hole to hole, the rocks look exactly the same. In some cases, there's a mineralization criteria. Some of these zones are associated with certain trace elements, certain textures. And if you look at these domains in that context, and you start to look at the filters of gold, again, we're looking right now at a gold filter of 20 grams per ton and higher. If I drop that down to 10 grams per ton, we just start filling in more and more values. And we start to see gold values outside of these, what we've called these known domains that we like. We like these domains because they have continuity. And you might sort of look at this and you might ask the question, well, why didn't you create a domain down here? There's 70 grams per ton in that sample. There's 10 grams per ton in that sample, and so on and so on. And it becomes this exercise in trying to figure out whether or not that's a legitimate high-grade domain, i.e. does it have continuity? Can we drill inside of it? And can we predict what the zone is going to look like? In this case, these are outliers. They don't have a lot of continuity. And in Red Lake, in my experience, and in other districts, mesothermal vein systems around the world, in reality, you would need to drill this very tight. You'd need to drill this on 10-meter centers, maybe 15-meter centers in some places, in order to prove continuity of those higher grade domains. And again, I'll zoom over to the hinge zone where we've drilled this down to 25-meter centers, and we have incredible continuity of those vein systems at 25-meter centers. At LP, we're still on 50 to 75-meter centers for most of this, but we're still seeing that continuity of mineralization. And I'll change my filter once more because my computer is going to say, stop doing this. It's too much. It's too much power to keep showing these numbers on here. Again, because of the scale, there's 4 kilometers of scale here. We're down now to 5 grams per ton and higher. And if all LP was a high-grade system, and you had these types of domains at, say, greater than 5 grams per ton, it's a very robust system. It has continuity along these high-grade corridors. And a lot of these domains carry very, very good grade, and they're continuous, both along strike and at depth. And a fair way to sort of look at this, again, is by cross-section. And so I'm just going to move over a little bit here and do a cross-section and go through some of those same filters again, which will allow us to see what this thing may look like at various grade levels. And to go to Chris's earlier point about assay distribution, actually to show what this thing looks like with the individual assays. So we're just going to look at a cross section here, and I'm going to rotate this view so we can see what these assays look like on a hole by hole basis. So again, this is one of our higher grade domains. I'm going to just turn off those interpreted high grade domains for now and just show you some of the assays. Again, I'm showing only assays here that are greater than 100 grams per ton, individual assays greater than 100 grams per ton. And on this particular cross section, I'll just count them off. There's 1, 2, 3, 4, 5, 6, 7 drill holes that don't have an assay greater than 100 grams per ton.
What's the scale here, Bob? It's hard for us to know how big it is from surface down to the bottom one.
100 meter blocks on the scale bar. So the distance from that 112 gram sample up here to this 107 gram sample is 411 meters.
Okay.
And that's an important distance because it needs to be, I'll just put the surface on for you. There's the surface there. So we need to understand how deep the system is and how continuous this mineralization. And again, I'm using this very unreasonable filter on my assays right now of 100 grams per ton because I wanted to show what these high grade domains look like. If I drop that filter down to 50 grams per ton, you'll see that all but one of those drill holes I counted that didn't have 100 grams in actually have a 50 gram or higher sample in them as well. And again, it just goes to show that we have these continuous zones of mineralization here, which are starting to show up. The 134 gram sample to the top right here is one of these outliers. It's one of these veins that's still intact, that didn't get crushed and remobilized. And if you could see my hands right now, I'm squishing them together. I don't know why I'm doing it by myself in my office, but I'm squishing them together to show how this rock was moved and milled around. That 134 gram sample has a drill hole that is only 25 meters away from it, and it doesn't reproduce that 134 gram sample. This is a great example of what vein systems typically look like in high grade systems. The other zone here is a great example of what they don't look like. And this is why the LP fault is so different than every other deposit that I've ever seen, in that you don't see this kind of continuity at these kinds of grades. And again, keep in mind, that's 50 grams and higher. Let's drop that down to 20 grams. And all we're doing now is filling in more material. We're starting to add more grade in. Yes, there's a 46 gram sample over here on the right-hand side. And there's some shoulder samples on that 134 gram sample there that make it a very legitimate zone, but we're concerned that we didn't hit that mineralization in a hole here that's 20 meters away. And the same down in here, we're not seeing that zone in these other holes. Whereas in the main domain, we're seeing lots of continuity. And what becomes really, really important here, as I drop this filter down, we're down at 10 grams per ton now. And again, all we're doing is starting to fill mineralization, and we're seeing a few more outliers. There's a 12 gram outlier on the left-hand side of the screen. We're starting to fill in some numbers. We're starting to see more and more of these values come into play. And if I drop that down to say 3 grams per ton, all we do is just make it thicker. We start to see now hints of a domain forming on this right-hand side. There's a 6 gram sample here. There's the original 134 gram sample. Arguably, I could make lines joining these together. I could say that these are continuous zones and that they probably form boundaries and they probably form domains. Are they high-grade domains? Well, right now we can't make that decision at all. But what the reason why we started drilling LP was, obviously we hit some high grade. In that discovery hole that Chris showed in his presentation, we had a 700 plus gram sample in there, and we were really excited about that sample. But my experience in Red Lake and the experience of the geologists working on site, we all collectively agreed that that 700 gram sample is going to be hard to reproduce. And we thought, you know, we could drill close to it, less than 10 meters away, and try to reproduce those numbers, and maybe step out and try to reproduce those numbers. But the purpose that would have served would have been to follow narrow little high grade chutes around and try to make grade out of them and make a resource out of them. What intrigued me the most about that drill hole was that wide zone of 0.74 grams per ton gold that was outside of that high grade domain. Those wide zones of mineralization told us that the system is very big. It's a big mineralizing system, and there's potential here for much more than just these high grade domains. And it's not to discount the high grade domains. I believe that this project would be viable if all you had was this mineralization that you see on the screen. But as I drop that cutoff grade down now to say even 0.5 grams per ton, we start to fill in a lot of mineralization outside of those domains. We start to see mineralization bleeding into the rocks around us. And if we look at all of the gold mineralization down to say a 0.1 gram per ton cutoff, you can see all of a sudden now these are 75-meter blocks that we're looking at on the screen. So the dimensions that you're looking at here, again, from surface down to this drill hole, that's about 457 meters. And if I was to take, say, a zone from about this hole and over to the right, the width of that is about 264 meters there, where we have some blank spots in the middle. We have some continuous high-grade domains on one side, and then we have this lower grade material bleeding out of the middle of that. And when we interpret these zones, we interpret them as both high-grade domains, that's the purple boundaries here, and we have low-grade domains, which are the red boundaries here. And they're really, really difficult. And Chris and I have had many friendly debates on how we can best present this information to the shareholders in a news release. And if all we presented in our news releases were the low-grade domains, we ignore the bulk tonnage domains, which are probably going to be the driver in a large-scale operation here. And if all we produced for public disclosure were the low-grade domains, we would leave out the intervening material. And this is a great view here that we can zoom right into it and look at the actual assay distribution between these red domains. And you can just see the grades of the higher grade material in between the bulk tonnage material. And again, we're not just lining up high grade hits from one drill hole to another. What we're trying to do here is use geology to drive the mineralization, to drive the criteria. Once the geologists in the field come up with that criteria, they drill a hole and they test that criteria. And if that criteria is correct and we're successful in intersecting the mineralization, then that domain becomes a real domain and we start to model it as such, and we start to build a bigger system into it. And it really comes down to sort of figuring out where these domains go and how we can follow them along strike. And I'm just going to zoom out here and rotate my view back. We can start to follow these domains along strike, and this is a very familiar view as a plan view. And if we rotate it and look at it in long section view, and this is a long section that we've produced over and over again that has lots of the bubbles on it. It's one of those bubble plot long sections, and I'm sure investors have all seen it. It's a very difficult one to show the public domain because you're really looking at a layered stack system here, and it's hard to see through this system if all you looked at was high grade or if all you looked at was bulk tonnage. And so we felt it necessary, at least in this context, to sort of talk about what this system looks like and what we're doing in terms of our modeling efforts right now. It's a really sort of a strange one. And if I can just sort of cartoon a little bit on the screen here. And Chris, let me know if there's a lag here at all on the drawing.
I'm seeing you drawing right now.
Perfect. So there's a surface here of just what the topography looks like here. And if we drilled a few holes, and let's just, for argument's sake, that the geologists in the field are drilling holes like that, and the scale here would be about 200 meters across between these two drill holes. We want to see if we hit gold, and we can see visible gold, and we can see visible gold here. And in a normal Archean hosted vein system where these are controlled by veins, you might interpret your veins to sort of look like this. And they're messy, they're folded, and they're very discontinuous. And in some cases, they may even sort of follow the core for a little bit here. And so you get a really nice hit here, and you get a really nice hit here, and you say, okay, I think this zone is continuous, and I'm going to estimate a resource on this using square blocks. And I'm going to estimate that block over there, and this one here, and this one here. And these will be continuous. I'm just sort of illustrating for illustration purposes. I'm just showing it this way. It would be false to say that this block right here has gold in it, because we know based on our oriented core measurements that the vein doesn't go that way. And same with this one here. But in normal practices, these blocks would get estimated if you don't do enough drilling. The difference at LP is that these vein domains here were originally sort of these wormy looking veins, discontinuous veins, because as Chris mentioned earlier, there was an increase in strain on this project, and things got squished in this direction and squished in this direction, that these little veins here, the gold was liberated out of them. And so we're now seeing sort of veins following along like this. And our geological model is telling us that this is what's happening. And we were able to predict this on really wide spaces, on 200-meter centers across 400 meters of strike length. As we started to fill this in, of course, we hit the zone. Every hole hit the zone. We can't tell you what the grade is, but we can see the mineralization and we know it's here. So now it's becoming more and more reasonable that we can estimate these blocks. These blue blocks can now have some gold in them, and we can do a better job of statistically predicting how much gold there is going to be in these blocks. And so it's kind of what's driving our modeling right now. And the biggest question we get is, why haven't you done a resource? And it's exactly the scenario that I drew when I first started. Is we didn't know how to fill this block here because we didn't understand what kind of drill spacing we're going to need to prove continuity. And so the continuity of the high grade now is really, really strong. And it does sort of follow that domain really, really well. The other question that we often get is, about deep drilling. We drilled these 3 holes down deep underneath the gap. They're just in the bottom right here. They did hit high grade. And you'll notice even in the current model, they're not included in the bulk domains or into the high grade domains down there because they're new. And we haven't had a chance to interpret those domains yet. But to think about drilling this on say a 4 kilometer long strike length, if this zone was inverted and it was tilted down so that it's vertical, we'd have to drill 4 kilometer deep holes along the strike length here. So it's more economical to drill shallow holes at this point in time. And it's a lot better and a lot more efficient to drill those shallow holes. And we understand the geology quicker and we react to that geology quicker. And it allows us to plan our drilling going forward. And Chris, I'm going to turn it back to you in a second here. I just want to finish with what we're doing today. We have our LP high grade domains. We have our hinge zone high grade domains and our limb zone high grade domains. So that's what we're looking at here. We're looking at nothing but high grade domains inside of this sea of drilling that we've completed to date. We also have, of course, the bulk tonnage domains on the LP fault. They don't exist over here at the hinge and the limb zones. What the people in the field are doing, what they see on a day-to-day basis, and we often don't, well, we never talk about really what's going on in the field. The crews in the field, the geologists that are working with this core every day and doing the modeling work that we sort of take and then pass on to our independent reviewers, they're looking at these domains in entirety. And these are all of these other domains that you see are what they have, thoughts and ideas that they have in the field right now that they're testing. So for example, that deep drilling that was done under the gap zone here, they've created a domain that they believe is continuous back to surface, and they will diligently now fill in drill holes between that because the size at 700 meters deep, that particular hit. They will go through and test all of these domains. There's 50 of these domains right now in total, including the ones that we've already released to the public. Not all of them are going to meet the criteria for high grade domains. Not all of them are going to meet the geological criteria, but these are works in progress right now. And as you can see here, some of the purple ones, we've reviewed them and we've accepted them, and we are confident that they're reproducible, that we can drill test them. And others are still works in progress. And some of these works in progress, of course, are current drilling, where we haven't received our results back yet, but they've started to see mineralization in them. And this is sort of the thought process that goes into the entire project, and how we've sort of come up with these models and how we continue to develop and build on them.
Bob, can you show us where are the 3 that we've put out already?
Sure. So the 3 domains that we've released to date are parts of these right in here. And so I'm zoomed in plan view. The middle one here is Oro 20. And then we have BR1 and we have BR7 here. And just in terms of a cross section through there, again, I'll just draw a section through the middle of that domain. And this is where it gets really difficult to be able to show this information on paper in a news release, because while we showed these cross sections, we showed the long sections here, we weren't able to successfully convey how much low-grade material there was between those domains and around those domains. So the purple domains here are the high-grade domains. And again, there's an outlier here as well. To the right-hand side here, there's a really nice intercept here. If you can't see that on the screen, I'll just read these: 112 grams, 9 grams, 12 grams, 5, 24.6, 2, 7, and 95.5. It's an outlier right now. The spacing between that drill hole and the closest one above it here is 84 meters. And between that drill hole and the one below it is another 72 meters. So we have some work to do on this cross section. We need to fill in a gap between these 2 drill holes. We need to fill in the gap between these holes. And some of this work is already completed, in order to be able to create a new domain here of high grade, and to also continue infilling the domains that we've already intersected here. In some places, we have way more detailed drilling than we do in here. Again, we want to always sort of reiterate that because the system is so large, we just, in 2 years, we just haven't had the time. I mean, as a geologist, this is a dream project for any geologist out there. And I would love more than anything to spend the next 20 years diligently drilling this thing off and trying to see how big it is. But my personal ambitions aren't necessarily the goal of the company, where we rely on investors. I don't think investors would be happy financing my geological dream for the next 20 years. So we have to do it in a timely manner. We have to get it done as quickly as we can. But 2 years from discovery to today is a very rapid pace of development. And that pace of development is really driven by the geological continuity. If we didn't have the geological continuity that we see, we would have a really hard time just lining up assays and convincing an independent third party that you have to just use assays. And that unfortunately is the downfall of a lot of gold systems, is being able to prove geological continuity. And so that's kind of where we're at right now. And as Chris mentioned, we've talked about 3 of these domains right now. We haven't talked about some of the stronger domains. And of course, we have lots of domains in progress right now, and these are all going to change. They're going to be constantly moving, constantly evolving. The crew in the field does an incredible job of looking at these domains every day with the staff that's there, the field geologists, and the project managers. They're continually reevaluating these domains and always giving us feedback on what they look like as we drill them every day.
Well, I was surprised, Bob, just having been there over the last couple of weeks, like looking at the 50 that we have sort of in total in evaluation. I mean, it's incredible to see the predictability. And oh yeah, there's your VG dots as well. Usually VG is a good indication there's gold around, right?
Yeah, and I just wanted to put those dots up to show you what the geologists out there, what they see every day. And we'll have, right now we have drills spread across 4 kilometers. So we're looking at a 4-kilometer window, drills spread across 4 kilometers, and they're seeing the same rocks, the same style of mineralization from hole to hole to hole. And of course, you know, if we had focused our news releases on visible gold, we would be putting out a lot of news releases, but there's a lot of speculation that gets created by that. So we've always chosen not to disclose what we see in the core until we have the assays to back it up. And again, it becomes an easy exercise for investors, for example, to see a line of dots here and draw a line between them. and
Yeah.
make an assumption that says, hey, that's a continuous zone. There's another X, ounces inside of that zone. Well, it's not the case, because it has to have that, again, it has to have that geological continuity. And what's to say that zone that we see isn't going a different orientation based on our structural data that we've collected? And I'll finish with that, because we do collect an incredible, every one of these discs is an oriented core measurement that a geologist has measured on the piece of core since we started this process. There's thousands of these measurements, and they are what drive the interpretation. It's data like these, data like the geochemistry, the gold system, and just the visual observations that the geologists see. This is what drives the interpretation that we see.
Yeah.
Okay, Chris, I'm going to pass it back to you.
I guess we could probably take a few questions here. I know it's run quite long, but at the same time, we're happy to take some of the ones that Knox had collected, and maybe some of the ones that have come up during this discussion as well.
Yeah, certainly, Chris. There seems to be an ongoing theme. Everybody seems to like numbers and timeline. A lot of the questions are around the current drilling. Right now, how many rigs do we have going? And when we're at our peak this year, what's the max amount of rigs that we'll be having going this year at the same time? And where will they be drilling in general? Just LP and hinge and limb, or where else?
So right now it's 6 rigs on the project. It's about all we have space for. It might get up to 7. We'll have to see about that. We've had a shortage of people. We have addressed that. There's been some great new geologists that I just met over the last couple of weeks. Those rigs are going to be mostly along that 4.2 kilometer area of the central LP. Bob and I have been talking about some other regional targets that we'd love to get rigs, drill holes into. And of course, we're going to take some rigs and go back to the Dixie limb and the hinge zone this year as well, and do some drilling there to sort of do that resource definition level drilling over the first 400, 500 meters of those as well.
Yeah, and when we talk about the resource calculation, and when we get to it, and where the cutoff is, part of the pun, where we actually do the resource, how many meters approximately do you think we'll have drilled into the LP fault by the time we start a resource estimate? And what spacing?
Okay, well, it's ongoing. I mean, Bob's done a lot of this work. I've done some of it with Bob, and we have external and internal people that are working on this all the time. So, you're probably going to be looking at about 40 to 50 meter average spacing at the LP fault over that 4+ kilometer area. And then you're going to be looking at around 25 meter spacing at the Dixie limb and hinge zone. In terms of number of meters, where are we planning to be by the end of the year, Bob, roughly, in terms of meters drilled LP fault, do you think?
Well, I think not so much meters. It's going to depend on the spacing and getting to that sort of 400 drill holes is what we've sort of planned. It'll definitely be I don't know the actual number of meters offhand right now, Chris, but it's going to be the number of drill holes, and it's going to depend on spacing, and spacing is going to largely depend on continuity of the high grade domains. We know the bulk tonnage domains have continuity. In some places, we may be able to estimate bulk tonnage domains on 100 meter centers.
Yeah, that's right.
And so as we learn more, we're adjusting that drill plan.
And the LP fault, we're mostly looking at about 400 meters in depth, and there's holes that do go down to 750 meters. But as you said, Bob, we could drill forever, and we want to have a resource before the next 20 years. And how deep do you figure we would go down into the hinge and limb zone? And would the hinge and limb zone be included in a resource estimate, in the initial resource estimate?
Yeah, I'll answer a couple of those points, and I'll leave it to Chris to finish the answer. But one of the issues with drilling deep, and we drilled those 3 holes underneath the gap zone, and they hit nice grade, they hit high grade, and they hit bulk grade as well. In order to include them in a resource, so now we have to fill in from those 700 meter deep hole, vertical of 700 meters deep. We have to fill in back up to 400 meters, and we can't. include them in an estimation because they're so deep. Yes, they're predictable. Yes, we predicted right where the zone should be, but in order to reasonably estimate them, we need to fill all that back in. So it's a great problem to have. Drill a deep hole, hit gold, and now you've got to do the work. But what it does is it changes our timeline. Every time we hit in one of those step outs or deep holes, we now have to add either more drills or more drilling. So we almost have to use a date. We almost have to say, okay, by this time, we're going to have enough drilling completed to estimate a part of this zone reasonably well enough with confidence that we can continue to do some of the blue sky drilling. But at this point in time, we're really focused on getting those near surface holes completed. And we may test some of the deeper holes as well. But like I say, even at the hinge and limb, we're down 768 meters vertical with 3 holes that all hit the zone. We now have to fill from those holes back up to the deepest drilling in order to include that in an estimate. So it's a bit of a double-edged sword in that you want to go down there and hit those deep holes and be able to produce those numbers. But now you have a lot more work to do to bring it back up to surface. So we're being diligent. We're trying to use investor resources wisely and not do more than we need to do in order to start to show viability of the project. And I'll turn it over to Chris to finish answering that.
Yeah, Knox, like that. We're not fishing for ounces here. I mean, that's I think some people may think that, you know, you're still fishing because you need more fish. Well, that's not really the case. What we're trying to show here ultimately is how good this thing is in the near surface. And if that's big and it's a really nice standalone project in its own right, as I was showing you with the comparison to the Red Lake gold mine and the other big deposits, you're really just drilling the head of the giant. I guess that sounds really lame in a way, but if it was a person standing in the ground, this initial resource is like drilling from the top of their head to their shoulders, and the rest of the body will lie down below. So I don't think you need to drill off the entire body to make this project big enough. And I don't think you need to drill the entire body to show that it's good enough, or it could be wonderful enough economically. So, you know, really this is about showing that you have a great starting point and a potential development launch point for the project in the near surface. And, you know, keeping the Red Lake analog in mind, where they're still defining gold 80 years later, you know, that you didn't want to go on a fishing process there of trying to define all those ounces out of the gate as well. You want to show that you have that size, that quality, that excellent, you know, economics and all that. That's our job. And that's what will yield shareholder value, because you need to put the project on the map with an underpinned value that's at the top end of the industry for comparables. And that's what our goal is Great Bear.
Right. And without holding you to anything, you want to get to that highly pixelated Mona Lisa. And I guess the next question is, from that point, how long do you anticipate a PEA, an initial PEA? Would that be another year, 2 years?
You could, you know, it could be, or you could be kind of doing that in parallel. And I'd like to get a little bit of a closer consensus with all the resource work that we're doing now on what that looks like. But, you know, I do feel, having looked at the preliminaries that are coming in, that the economics on this project will have very few parallels, and that incentivizes us to make sure that the PEA happens in short order.
Right. And another common question is, at what point do you think a major might come in to look at Great Bear? Are they waiting for a PEA or a resource estimate, or it's just hard to say at this point?
Honestly, like we've had opportunities at various points to get involved with larger producers. We've always valued our independence and our ability to advance the project properly and benefit our shareholders. So you can't predict those kind of things. We do want to get this project all the way over the finish line, you know, as Great Bear, because we see what we're looking at here. There's a lot of value that's still that has not been materialized yet. And you think about those PNAV slides. If we're about a 0.4, but you know, the average for what our group of peers is about a 0.8, and the tier one is about a 0.14. I mean, we're looking at being able to materialize multiples of current value. If these things are correct, it's three times, 4 times current values. I'd love to see that inside of Great Bear. So, you know, why would we be in a rush to, you know, do something early? So right. Anyway, yeah, you know what I mean?
That leads into my next question. There's a perception that the stock has been stuck at around the $16 level this year. What's the major catalyst that needs to help it move, in your opinion?
Well, I think you know, we can think about this in terms of a Lassonde curve a little bit. And, I've had people tell me this odd question that we've peaked on the Lassonde curve. Well, it's still resource, like we're still growing every day. I was just in the field for 2 weeks, and it keeps growing. Like all these holes that are going in, I mean, they make it bigger and bigger and bigger, and then they backfill at the same time. And, like it actually is expanding rapidly, and it's expanding consistently. So we haven't even got to that point yet. So I think what we did was we went up quickly last year. We grafted on about $400 million of market cap. And, that sort of, that backfill level didn't happen. We just kept adding value, kept adding value, kept adding value. And now the market is looking at us, the deliverable for value, the catalyst is probably like I'm talking about. If we're correct with what we see here of being a very big discovery that has excellent near surface economics, and that's what we have to prove. But if we're right about that, the company should be worth multiples of where it is right now, and that'll ultimately get reflected in the share price. We don't need to issue more stock between now and then, so the denominator, the number of shares, won't change between these things happening, and it should have a much better value based on what we're seeing in terms of comparables and analyst projections and other things. So we need to do our job, and we need to deliver on that, and that's what we're entirely focused on right now.
Meanwhile, I know you've covered this off in other webinars, but just as a reminder, how do you value the 2% NSR with Great Bear Royalties, and how is that going to progress as Dixie nears the mining stage?
Well, I think, we have, that is a separate company. I know I'm part of it, but it has its own management team, and it has analysts that are working on it right now. And you can look at their sort of anticipation of what that value could be. I mean, Callum has done some spitballing on there. It could be a couple $100 million. It could be 400 million. It could be, I don't know, Knox, exactly what the value is going to be, because we haven't finished doing our job at Dixie yet with Great Bear. Really, the valuation will come in on the heels of economics and understanding how good this project is, and that'll underpin the value. But it's certainly, people do have nice expectations on that side as well.
Okay, we just have time for a couple more questions. I'll take some ones that just came in. Here's one. Would you elaborate on your decision to accelerate earn-ins on Packwash, Sobel, and Red Lake North, but to terminate the option on DD property?
Yeah, like effectively the DD project, we had done a couple seasons of field work on that, and we're not seeing the types of results that would lead us to prioritize work there. The other projects, with the work that we've done so far, and there's more coming up now, we actually have 2 of our geologists in the field working on them right now. Those are showing the kind of results that we think are generating or have the good potential to generate long-term value. So we're more interested in them. So because the earnings were very small, you're only looking at a couple $100,000 in total, really on that side. We might as well have crystallized that earn in and just proceed accordingly. And that way, whatever benefit we find, we have optionality there. So we decided to proceed a little bit more rapidly, and we just weren't seeing what we liked at DD right away. There could still be potential at the project, but we have to prioritize, and we've decided to prioritize on the projects that we kept.
Right. And in the event of a takeover, would you just sell Dixie, or would you spin out the other properties and maintain control of those other properties?
That's really something that the board would have to discuss. I don't see that the value of those projects is intimately related to the value of the Dixie project itself. So there are options, I think, that would be considered. At the flip side of that is that it is a great land position. They are highly prospective projects, and that might be interested to others. But Knox, the real answer to that question is, it's Great Bear that's pushing this project forward. So it's a little bit of I'm answering a little bit how many angels dance on the head of a pin.
And how long is the string? Yeah,
exactly.
Okay, with that, a final question. We do get this question a lot. Do you think it's important for Great Bear to be listed on the big board at this point, or is there thoughts to move on to a U.S. board as well?
Look, there's a few things that Great Bear does better than anybody else, and I've been told this by corporate entities that really know their stuff. And we see it in our disclosures. Like we're providing complete assay interval data over key holes. We're providing cross-section after cross-section after cross-section for years and years in a row. We're providing interval level disclosure. We're doing oriented drill core. We're assaying top to bottom. There's no doubt that the information you're getting out of Great Bear is the accurate information and an accurate picture of the project. I think related to the big board, I would like to see, I think that would give us a peer group that would be more comparable to the quality of work and the potential of the project that we have here with Great Bear. So I see the big board, the TSX, as a natural destination based on the quality and really the peers that we do associate with and we want to associate with. So that's sort of an objective for us as a company. Yeah, I think you're going to see that in the not too distant future.
Okay, well, thanks for that, Chris. And thanks very much, Bob and Chris. That was a very detailed webinar. And if anyone has any more questions, feel free to email us at info@greatbearresources.ca or call us at 604-646-8354. Anything else you'd like to say for send off, Chris?
Yeah, thanks everybody for tuning in. Please call us with any questions. Always happy to take them, and watch for those high grade domains. They're going to keep hitting the market on a regular basis, along with a great deal of drill result information. So as we go towards the end of the year, there's going to be a lot to see here, and we're happy to share it with you if you have any questions.
Okay, that completes our webinar. Thank you, everyone. We'll be signing off in 3 seconds.